So you'll see a lot of videos on YouTube about going over technical strategies and very basic data points, but I'm going to show you my full process on how I come to finding trades and then actually getting into those trades. So you can see here on the screen, I'm looking to take a short here on Euro Pound. This is live markets. I'm not in the trade yet, but I'm considering entering quite soon. So I want to show you how I got to this point. So as any of my regular viewers may know, every weekend I put out free research for people. I put this in the Discord for our members, I put it in the free Telegram, I even put this on Twitter. So we can see here on the trade ideas, we've already got a reading to short Euro Pound. Now I've got to break up my analysis. We've got to look at current markets and forward-looking data. So this is forward-looking. So we're looking at the ECB is widely expected to cut rates in June, while the Bank of England is delaying its first cut, waiting on wage and services inflation to cool. So I know that that's what the markets are focused on right now. Obviously, we've actually got tariffs going on. That's a big talking point right now. However, in normal markets, if you will, when we don't have tariffs and big market movers going on, when it's generally just the typical fundamentals and geopolitics going on, you get the point. UK core inflation remains sticky while Eurozone disinflation is accelerating faster than ECB projections. Now, this isn't a economics course, so I'm not going to break down every single point for you. But generally, what this means is if inflation in the UK is sticky, it doesn't give the Bank of England much room to cut or to hike. Their real only option is to hold at that point. And if we have inflation coming down, so cooling inflation in the Eurozone, that leads the central bank more towards an easing path. So that means we've got that central bank divergence. We've got the Bank of England expected to hold, and then the ECB expected to cut. So now what I can do is go to the Elite Traders Discord here, go onto this Bank Reports channel, download the most recent one, which is from yesterday. We send these out every day at the end of the day because we get this message a lot actually. Why don't you send the bank reports out as soon as the market's open? We can't do that because the bank reports are not written by that time. So, if we wake up for London session, New York session hasn't started. They haven't written their reports yet, so we can't get them, they don't exist yet. So we send them out at the end of every weekday. Now you will see it downloads as a zip. We just obviously unzip this. Then we open the file. And actually you can see here, 87 items. There's 87 reports in here. Now that might be very overwhelming, but there's two ways you can look at it. That's too much. I don't want to pay attention to that. Blah, ignore it. Or, wow, 87 reports from institutions. I'm a lucky fella. So I view that as I'm a lucky fella. I've got access to 87 of the best institutions and what they're thinking at this time. Now, I don't read every single one. It would take me too long. I don't have time for that. No one has time to read all of these. So what you should do if you do end up on the bank reports path, and that's something you want to do, is you would, first of all, yes, read the majority of the ones you can. Then you take what you have learned from that and say, okay, well, Bank of America, I actually really like their analysis. They over the past week, their bank reports are very clean. Their information's to the point. It's quick to read. It's easy to understand. I'll focus on Bank of America. Then maybe MUFG. MUFG reports are really good, and I can't actually see one in here like this. So this is, again, from this today's file, or yesterday's file, if you will. Renewed trade tensions trigger uncertainty in US dollar selling. Obviously, yesterday, depending on when you're watching this, yesterday on the 2nd of June, we did see the dollar get hit pretty hard. And again, we can read all of this information here. So what I would do, if I already had a trade idea, I might then go and scan the bank reports. But we're going to, again, starting this from the very basic start. So what I do, every Saturday, I will take Friday, Thursday, and Wednesday, so the past 3 days or the end of the week or the previous week's bank reports. I will make a lot of notes and I will say, okay, so this is what's going on, this is what's going on, and then I will aggregate them. And that's how we end up with this elite research that I, again, send out every Sunday. So really, you don't want to start with the trade idea because it's sort of watering it down a little bit too much. What you would really want to do, again, while looking at Euro Pound in today's example, I would go to the Euro and I would say, okay, over the next 1 to 4 weeks, this is, first of all, what the market is looking at, what they're expecting. And again, this is all from institutions. This isn't my analysis. I'm not going to take credit for this. All I do is put it together into this place for you. So here we can see ECB poised to cut rates in June. Inflation undershooting risks. So again, if inflation's coming down, that benefits this rate cut narrative. Growth resilience masking underlying fragility. I've been saying for a long time, I think the euro is overvalued. Tariff risks and external trade volatility. Fiscal stimulus delayed, not absent. And then again, we get this summary here. So this is how simple it really can be, especially if you're in elite traders. And this isn't supposed to be an ad. I'm not trying to push you. I'm not trying to upsell you or anything like that. I'm just showing you this really is the process I do. And obviously, I run elite traders, so it's going to be very, very similar to what I teach. And obviously, this information I put in there. So we've done the euro. Now let's have a look at the pound. Similar thing. We just, again, you would in reality read all of this, but for this video, just to keep it relatively on time, I'm not going to read every single point. Inflation is falling, but services stickiness remains, again reinforcing that rate hold. Bank of England, Bank of England cautiously preparing for a cut. Wage growth still too high for comfort. Domestic demand stabilizing but fragile. Political backdrop could limit fiscal room. And again, this summary, these are very, very good to read, actually. If you just want to be doing sort of macro on the fly, so let's say you've got a really, really good trade idea already, and you just want a little bit extra juice just to back up that idea, or even just to sort of caution you off from that idea even, you would go and read this, you'd have a look at the summary. And again, this is completely free. I don't charge for this. It's in the Telegram free. It's on Twitter for free. I put it in the Discord as well, obviously for our members. So again, I'm not trying to upsell you to this. There is no cost. Okay, so now we've got an idea. Obviously, again, we would read the full thing. We'd take our notes, and we'd have an idea of what we want to buy, what we want to sell, what we want to stay away from. Again, you can do the same for commodities. We've got equities here. We've even got the global news that you would want to pay attention to. So again, euro pound is the focus. So then we go over to the EdgeFinder. There is actually, I'm be totally transparent with you, I am affiliated with the 3 softwares I use, and I'm affiliated not because I'm trying to influence you to buy them. I am affiliated with them because I actually do use them. I'm friends with the owners of all the softwares, and obviously it makes lots of sense. If I can offer you guys discounts because I use it, I think it's a win-win really. But again, you don't have to do this. You don't have to use these softwares. This is just my process. So anyway, back to the point. What were we looking at? Euro pound. What's on here? Euro pound. So we've got this bearish scanner here. So let's just click on euro pound. Amazing, amazing stuff. So here we can see, again, this bearish reading with a -7 score. So already we've got 2 things in our favor. We've got the research, which is in our favor for euro pound shorts. And now we've got the EdgeFinder in our favor to short as well. So do you remember what I said about forward-looking and current-looking markets, or current-looking analysis, whatever you want to call it, data? So this is forward-looking stuff because it's taken from bank reports. Is what the markets are wanting to, or what they are expecting, what they're currently looking at. The EdgeFinder here, this is current data. So as you can see, there's no predictions on here. It's not what's going to happen with the central banks. It's not what's going to happen with inflation. This is just what's going on right now. What's the most recent data tell us about this market? So this is more of an entry tool for me. So if euro pound was actually really bullish, but my analysis on here was saying bearish, I might actually just wait, because then that means the current data is actually pushing the market up, but forwards looking information is telling me the market wants to go down. So that might tell me, yes, the market might go higher, so then I can actually get a better entry. But again, we can maybe move on to that slightly later in the video. So if we look here, seasonality is bullish, but seasonality, in my opinion, for especially G10 currencies is pretty meaningless because it doesn't take into account a lot of the cogs in the markets, like inflation, like unemployment, or even the labor market in general, like the central bank policy, even things like trade wars. It doesn't account for any of that. It's historical price movement, so obviously it's data that we should account for, but it's not something I put that much weight on. We can see retail is majority long, only by a slither. So generally, we want to counter trade retail traders. Obviously, they are 54% long, 46% short. So obviously, we want to short, so that makes sense for us. We've got COT that's relatively flat. You can see here it doesn't have a score, so it doesn't tell us anything really, so we can stay flat. But again, we already know that central bank divergence is there, so we can start sort of banking on that a little bit more. GDP is favoring the pound, as we can see here. So because we're getting a negative score, that means that the pound is going to strengthen, or this benefits the pound more, so euro pound will come down, which is negative for the pair in general or overall. Same thing here. Manufacturing PMI, services PMI, retail sales, inflation, employment change actually is flat, unemployment rate and interest rates. All of these macro data points or leading indicators are bearish for euro pound, making it bullish for the sterling pound and bearish for the euro. So we know that we want to sell this market now. This is looking very, very solid. And again, this is live markets. This isn't hindsight stuff. And I'm not in the trade yet. I'm still in the planning phase. So I'm really showing you what I do and how I approach this. So now what we want to do is look over here on Market. And again, I am affiliated with Market. All the links to these softwares are in the description. Again, please don't feel like I'm trying to upsell you. I'm not trying to do any of that. This really is just how I approach the markets. This is my process. So, Market, what we want to look for here, or what I look for here, specifically in this process in itself, is I'm looking at the market sentiment and this risk gauge. Because what we want to do is account for what flows are we going to see in the market. So, for example, if we are risk off, generally we would see the US dollar gain value on that. We would then see an outflow of the euro. However, in this specific time when we're having tariffs, we're actually seeing the opposite. So here's a little lesson for you. When we have a risk-off market or risk-off sentiment, again, as I said, we would like to generally see the US dollar benefit. We often see the yen benefit. We often see the Swiss benefit and gold. However, in this situation, because the risk-off sentiment is driven by the US, by US's tariffs, the US dollar is not benefiting from that. We're seeing investors actually use the euro as a proxy for the dollar. So the euro has been doing very well. So if we are seeing large risk-off moves due to tariffs, that's actually quite beneficial for the euro. So this isn't actually a great sign for us. It's a good sign that we might see the market climb higher so we can get a better entry. But to enter right now might be a little bit too risky. That's something we need to keep in mind. Now again, what we can do here is go to currencies, we search, and we can just search for euro pound. So we click here, and then this will give us a summary of euro pound. So again, we can just get a very quick, very easy outlook on what's driving the market, what's going on here. So the H1's neutral. So for intraday positions, there's not really anything there. The daily trend is bullish, but the weekly trend is bearish. So for me, this tells me the overall or the higher time frame is bearish. Obviously, we can see that here. If the daily's bullish, that means I'm waiting for this daily to actually flip bearish to align with this weekly, and maybe even the H1 to flip bearish as well. And that way I can have all three timeframes aligned and I can be in the same direction. So this is some technical, sorry, I misspoke there. The euro pound pair remains stable, currently trading around 0.8434 with minor intraday movement. The exchange rate has fluctuated modestly in recent days, reaching a weekly high of 0.845 and a low of 0.836. No significant macroeconomic or geopolitical developments are driving large moves, and the trend appears sideways as traders await new data or events. This is important. So no significant macroeconomic or geopolitical developments are driving large moves. So as I said earlier, with the risk gauge and tariffs, that's not maybe a huge issue actually. Maybe now we can actually look to take that short position. Sentiment analysis, euro pound steady with volatility. There's currently no notable macroeconomic releases or geopolitical events impacting the pair. The exchange rate is reflecting balanced forces between the euro and the pound. So this is good. So there's nothing weighing on it. There's nothing really going on too much here. So let's just go back to the chart. I just wanted to refresh myself on the chart. I just wanted to say, okay, they say it's been moving sideways. It has pretty much been moving sideways. We created a new low here, but we've created equal highs. So yeah, it's really not done that much on a technical view. But we're not worried about the technicals just yet because we've got one last step. And that is PrimeMarket Terminal. Again, this does cost money, but I do have a discount code for you in the description if this is something you want to get. So first of all, we want to look at the rates. As we already looked at here, we do have that rate differential. So I just want to zoom in on that a little bit. So all of this information that we saw on euro pound is good, but I want to be able to zoom in. I want to verify all of it. I mean, I'm not saying the EdgeFinder is wrong. I just want to be able to see what the previous data has been. Are there any expectations? What's behind the hood a little bit more? So on PrimeMarket Terminal, we have this really, really nice tool called the interest rate probability. Now, these work from models. I'm not sure exactly what PMT's model is, but generally, a lot of these models have a unique way of finding out the probabilities. They all give very similar results, but you generally won't find two models that are exactly the same unless one's copied the other. So I'm not sure how PMT does it, but I would expect it takes into account labor market, inflation, previous words by the central bank, and then obviously gives us this probability. Either way, we can see a European Central Bank next expected move is a cut. We've got a 60% probability of the ECB cutting, and we can see here on the future probabilities, it looks like they're just going to continue to cut into 2026. Now, obviously, anything can happen. So this could completely flip if we get, hotter inflation, or we get inflation heating up. We start getting hawkish words from the ECB. This could completely flip. So I'm not really interested in looking too far into the future. I really care about sort of the next 1 to maybe 3 rate decisions. So Bank of England here, 90.5% probability of holding. Again, it looks like they are going to be cutting rates, but at a bit of a slower pace than the ECB. So that gives us a really nice confirmation on that divergence. So now we just want to have a look at the inflation. We have got the UK inflation. Actually, let me just put this on all. Sorry, my bad. I need to put this on 3 years. UK inflation is currently at 3.5, and we've got the Eurozone here at 2.2. So we do have cooler inflation in the Eurozone compared to the UK. And now if we just have a look at this list, we get this really cool little sort of reading. It's very similar to the EdgeFinder, actually. Slightly different, obviously. So euro pound, the fundamentals here are bearish. We've got bank research that's actually bullish. Smart bias is bearish. So I know I want to be bearish. Even though bank research, which obviously institutions are bullish, I'm going to take that with a grain of salt. Now, there is one last thing. Now, I've kind of skimmed over it. I do normally go in a lot more detail, but it's kind of the same thing. So as I said on inflation, I do the same thing, but for employment, GDP, those types of things. Anyway, there is one last thing that I do on PMT that is really, really cool, which is these bank trades. So I'm looking to go short on euro pound. We've got actually right here Refinitive's in a position. So I can click here and see Refinitive's just taken a short, actually, which is really, I didn't know that. Actually, I just saw it as you guys did. That's really cool. So we've got Refinitiv in the same trade. We've got ANZ. What are they doing? They're actually in a long position, but they're in some drawdown, and I don't agree with the long position. So it doesn't mean too much to me, but it's nice to know. It's good to keep in mind. So there we go. We've got our confirmations. This looks like a very, very strong trade. So let's go over here to the charts. So let's get rid of that for now. So my technical analysis is very, very simple. It doesn't involve much at all. And this is specifically on swing trading. I've got different strategies, but for swing trading, it's just very sort of bread and butter, very standard, basic stuff. I don't do anything complex. So all I'm really looking to do is just look at higher time frames. What's the market doing? We can see the weekly, which is this time frame here in the middle. This is bearish. We've got this 200 moving average that's above price. And the monthly is bullish, actually, which, to be honest, isn't great. That's not what I want to see. And the daily is just bounced off this 200, which is something I do really need to keep in mind, because if you don't know, the 200 moving average acts very, very well as a dynamic support and resistance. I mean, a great example is here, actually, on this weekly. So if we just look, you can see here, bounce, bounce. This was a rejection. We had a bounce here as well. This was obviously a little bit of an overshoot, but it's still used it as a nice support. So it's something to keep in mind. You don't really typically want to sort of buy into a 200 or even sell into a 200. Okay, so what's the next move here? We've got two options. We could either just sell at resistance, keep it simple and sweet. So it'd be something like this. Stop loss above the previous high here. That stop loss is a little bit tight for me, so I might just extend it a little bit more and give the market some room to breathe. Take profit, I would put it down, you know what? I would put my take profit down here. So I've spoken a lot about the market behavior on euro pound recently. In fact, I talk about it all the time because I love euro pound's price action, but it can be very, very tricky. It's a cruel mistress. So what do we notice here? Well, it's very simple. We have aggressive moves quite often on euro pound, but what happens after these aggressive moves? Well, we often trend much lower than the initial price point. So we look here, this was the aggressive move. We trended much, much lower after that. Same thing here. This was the sort of initial low. We trended lower after that. Same thing here. This was the initial low. We trended lower after that. So this is the initial low. Are we going to trend lower and maybe retest this support level here? Maybe. So these are things to keep in mind. How does this market move? What's its tendencies? How, well, it's like a person. You need to read it. You need to say, okay, I kind of understand the way that this moves, the way it operates, the way it thinks. So yes, I'm not going to have a take profit just at these recent lows because I think that might be undershooting a little bit. Conservatively, you could have it at these previous lows here. I'm going to put it right down here at the most recent, the furthest low. And that gives me a nice 1 to 6, but obviously a 1 to 6 is huge. So I may need to just extend that stop loss a little bit more, something like this. And that gives me a 1 to 4. I really like this. I think this is a really, really solid setup. So that's option 1. Option 2 is if we come back into this resistance here. So let me just extend that a little bit further. So again, we're just looking for stop loss above some sort of structure. Take profit will be at the same level here. And that's kind of how I would do it. I'd be looking for these key levels in the markets. Now, there is one other tool I use. It actually doesn't fit on this chart right now, which is why I've not really used it. But I love the fib. So if you go to the side, you click on Fibonacci retracement, you can draw something like this. And you can see we have a 0.618 and a 0.5 level. Now, these are fib pullbacks. There's different names. I think some people call it an equilibrium. I'm not interested in those fancy words. It's just a fib retracement in my view. It retraces 50%, or it retraces 0.618, or it doesn't retrace at all. That's just how simple it is. Now, again, I don't see an option to draw one here because there isn't really a recent high and a recent low. We've kind of just been consolidating. We created this low. We've got this high here. So there is no real fib level. You can sometimes force it like I have done here from this high to this low. It's acceptable in this situation, but it's not ideal. This is more me trying to force it, but it does fit. So I would leave it there. But again, it's in this situation, it's not going to be a sole confluence for me. Okay, so that's the technicals down. It's very simple. Well, again, just to quickly recap, we're looking for key levels or levels of structure. Ideally, I want to see a fib level, so either a 0.618 or a 0.5 pullback. I would also like to see the 200 moving average in the same direction I'm looking to take this trade. In this case, it is bearish, barely. This isn't overly convincing, but this could be a great turning point on this moving average. So what I need to see now to confirm this trade is this candle, this H4 candle, to close bearish. If it closes the way it is, that's not good for me. Let's just zoom in a little bit. I don't like to overanalyze candles. I'm not really worried about what previous candles are doing. I just want to see the current candle confirm the momentum and confirm the direction. So the way it looks right now, we're seeing rejection to the downside after quite a nice bullish run. So this tells me actually this market could run higher at the moment. So I don't want that. Obviously, if I'm looking to go short, that's not what's ideal for me. So I need to see this candle actually close and engulf this sort of area here, and then that would confirm the sellers in the market. It's a possible reversal point. Then we could enter and look for this short trade. So that's pretty much it. It's very short. It's very simple. It's very sweet. I do have full courses in my Discord. So you can see here we've got our video lessons in the Discord going over all sorts of different things, more economics, technical strategies, those types of things. If that's what you're interested in, you would also like to follow my signals, get the bank reports, those types of things. Click the link in the description. You can join my Discord. It's currently on a huge discount. Actually, I'm not going to tell you what the discount is. You have to find out for yourself. Again, the links to the softwares I use are also in the description. So guys, have a good one. I'll see you very soon, and thank you for watching.